Moving on to the next question. So now we will be working out income, expenditure and the balance sheet. Previous questions we didn't do balance sheet, but normal question they will be asking you the balance sheet also. So we will see how to do the balance sheet along with income expenditure. Illustration number 28, page number 1.40. From the following receipts and payments of Friends Club, prepare income expenditure. Okay, we have certain adjustments, so read adjustments first. Beginning of the year, that means opening figures are given. Club had books of 3 lakhs, furniture of 58,000. So do one thing, you have to put tick marks against books and against furniture, but do we have furniture in receipts and payments account? No. On which side of the account you can find furniture? That would be always on the payments, because it's something which we purchased. So it will come on the payment side, but we don't have any furniture. The meaning is opening furniture you have of rupees 58,000, isn't it? Opening figure you have, then you haven't purchased any additional furniture during the year. That is why inside receipts and payments we don't have any figure. That means only the opening figure we have. During the year we didn't purchase anything new. Whereas books, we have purchased additional books of 31,200, which is given on the payment side. Understood? Then subscription is having adjustment, so put tick mark. Then the next one, 18,000 by way of rent in the beginning, and that means rent outstanding is there, put a tick mark against rent. Then write off 5,000 from furniture and from books. The meaning is there is depreciation to be deducted. Write off means decrease. Decrease in the value of fixed assets is known as depreciation. So we have adjustment, already we have put tick marks against furniture and books. Okay, and depreciation, it is recurring in nature, that should come in income expenditure account. So we will start the question. You give the heading and draw the format. This is illustration number 28. March 2020. That opening balance you can ignore, that will go to balance sheet directly. Entrance fee we have to consider here. So entrance fee, it's the income, so which should come on the credit side by entrance fee, 55,200. That is considered as revenue item. Then subscription is there and it is having adjustment also. So we will write in the inner column, the received amount is given here 2,20,000, which you write in the inner column. Then we will read the adjustments. First one, subscription in arrears on 1st April 2019. 1st April 2019 means beginning of this year. We are doing for 2020 end. So 2019 1st April means beginning of this year. There is subscription arrears or subscription outstanding. So outstanding in the beginning, what should we do? Outstanding in the beginning we have to less. So this is outstanding for 2019. The amount is 6,000. So we less that, right within brackets. Always negative figures write within brackets. Otherwise, when you are writing exam, when you are in hurry, you will automatically add all these. So write within brackets if it is negative figure. Then subscription outstanding or in arrears on 31st March 2020. That means subscription outstanding at the end, which we have to add now. The amount is 7,000. So 2,21,000 we can write in the outer column. Then the next item given there is general donation. Since it is general, we can write it here. Then in one question they didn't mention anything. Simply donation also general donation. Okay, which we can consider as revenue. $56,100. Next one is legacy donation. Okay, see, legacy means that we discussed in previous video, I think in first video or second video we have discussed. Legacy means it is the amount received by us. By us means we are NPOs. So by NPO, as per the will of a deceased person who died, in his will he would have mentioned like this particular amount must be given to this particular organization. So that's the meaning of legacy, and here nothing is mentioned, the purpose is not specified, that means it is general. If it is for general purpose, you can write it here, you can consider as revenue. Or if they say like legacy donation within brackets, if they specify the purpose also, don't take it here. Here we can write since nothing else is mentioned. The amount is 50,000, isn't it? Yes. So by legacy donation 50,000. Then interest is given 4,100, which we can write directly because that's also recurring in nature. Interest figure is directly given. Then surplus from cultural programs, that means your club conducted some programs and you got a profit from that. That is also revenue for you, for the firm, for NPO. $8,200. Now on the payment side, that means all these will now appear on the expenditure side of this account. To the debit side we have to write. So actually it is to the opposite sides we are transferring. So rent and rates 86,100, which is having adjustments. So we will read adjustments now. 18,000 by way of rent in the beginning. That means outstanding in the beginning. What should we do? Outstanding in the beginning we have to less. And there is something like same figure 18,000 outstanding at the end of the year, which we will add just like subscription. So write here to rent and taxes, the amount is 86,100. With that we will add outstanding at the end 18,000 and we will less outstanding in the beginning 18,000. See, actually plus and minus 18 will get cancelled and you will get the same in the outer column, but even then you must show this because there are two adjustments like this. That is why again the rent figure is same. Okay, this must be shown here in the inner column. Then the next one is salary, which we can directly take, that is recurring in nature, 1,09,000. Then electricity charges, the amount is 6,200. Then we have books. Books, will you consider here an income expenditure? No, you should not. See, purchase of books means it is non-recurring in nature. Unless it is a bookshop, it will be non-recurring. Will you purchase a book at regular intervals? No. Will you means not as individuals, we are NPOs. So for this particular club, theirs is not a bookshop, so they will not be purchasing this on a regular basis. So that is non-recurring or capital in nature, just like a furniture purchased or just like any other fixed asset. So here it is considered as a fixed asset, not repetitive in nature. So this is capital in nature, don't include it here. Whereas we have put a tick mark against books because adjustment 4 says that we have to write off 5,000 from furniture and 30,000 from books. That means it is the depreciation value given. That depreciation we have to write. We are not writing furniture and books value because that is capital, whereas depreciation values we have to write. This is books depreciation and this is furniture, that is 5,000. So, depreciation we have 35,000. Okay. Then the next one is office expenses, which you have to take here. Did I miss general expenses? Yeah, after electricity charges actually you have general expense, just write it. You have to move in that order itself. I accidentally forgot to write that. I missed one item there. General expense should come here. 12,500. Then office expense also recurring in nature, that is 45,000. Amount is 45. Yes. Now the last item on the payment side is investments. Investments means you are putting your amount somewhere, like you invested amount in the bank or in some other organization, you can put your amount, you can buy their shares and all. So all these are kind of investments, which is, if nothing is mentioned, investments are non-current investments. We have two types of investments, non-current and current. Non-current means it's fixed asset, which is not repetitive. So here it is nothing mentioned, it is non-current investments. That means you have to take as capital item. So exclude it here. Then interest already we have recorded. Yes, so with that your expenditure side will get over. Now you just find the balancing figure. Here also we are getting a surplus. So surplus we can write on the debit side. So to surplus, here the amount is 1,08,000. That's a balancing figure. Just compute and write. Then you write the totals also. Okay. Income expenditure is over. The question is not over because we need to do the balance sheet also. Now the normal format of balance sheet: liabilities, amount, assets, amount. Liability side, which would be the first item usually? You remember last year what did we write there? It's the capital we are writing. Capital, add net profit, less drawings. The same thing we will do here also, but here there won't be drawings, there won't be any withdrawals by the owner because there are no owners actually, there are only members for NPO. Okay, so drawings will not be there, but there is net profit. Instead of net profit we are referring it as surplus here. Surplus, and instead of net loss we are referring it as deficit. It would come here on the credit side. So with that figure, that means capital figure, you have to start. Do we have capital in this question? No. If you look into the question, we don't have capital figure. We have opening balances of books, furniture and all, but we don't have capital figure. So what you have to do is, you have to compute the opening capital first. With that only you can start the balance sheet. That means the closing balance sheet we are doing usually. The balance sheet as on 31st March 2020. That's a usual balance sheet we are doing, the closing balance sheet. For that we need the opening capital, because with that opening capital we will be adding the surplus or we will be deducting the deficit. So that opening capital is needed. To compute the opening capital, what should we do? You have to prepare opening balance sheet for this question. So if opening capital is missing in the question, first you must prepare an opening balance sheet just to compute the opening capital. So that balance sheet will not tally. There will be a balancing figure that will be taken as the opening capital. With that we will start the closing balance sheet. Okay. So in these type of questions, two balance sheets will be prepared, opening and closing balance sheet. So we will start with opening balance sheet and you give the heading balance sheet as at the opening figure you can give. That means the last year's year ending will be opening of this year, and balance sheet is always prepared for the year ending. So last year's year ending date you have to write. That's the opening of this year. and the format is usual format, liabilities, amount, assets, amount. Okay, so now we are doing the opening balance sheet that you have to remember. So from the receipts and payments, only one value will be taken. That is the opening cash balance or opening bank balance. Opening cash balance, here we have 1,41,300. Only that figure will be taken from the receipts and payments, because all other figures are done or all other figures are received or paid during the year, because this is the account we are preparing for 31st March 2020. So only this cash in hand is the opening balance. All other figures we have to take it as happened during the year. So these will be taken only in the closing balance sheet. In the opening balance sheet, what you have to take is only this opening balance of cash from the receipts and payments. Now you have to read the adjustments also. There also just consider the opening values. You have opening value of book and furniture that you can write directly. That is books of 3 lakhs. And furniture of 58,000. Okay, then subscription in arrears, that is subscription outstanding, and the opening figure is given 6,000, which we have to take here. But on which side? That is outstanding amount, but will you write on liabilities? No. Outstanding here meaning is receivable. We have to receive that subscription. So that must come on the asset side. Don't write subscription outstanding on the liabilities. This is receivable amount. The amount that is opening figure we will take 6,000. Okay. We are just moving in the order of adjustments given there. Then next one is, okay, rent outstanding in the beginning 18,000. Rent outstanding means that is payable, which should come on the liability side. The beginning figure, the opening figure 18,000 we will write. Okay. Then the depreciation is given there for books and furniture. But when will you charge depreciation? Only at the end of the year. So these two will come only in the closing balance sheet. So now the opening balance sheet is over. What should we do? From receipts and payments, you can take only the opening values. That's the first point you have to remember. So from receipts and payments, you just have to take the, normally you will have to just take the opening cash balance or opening bank balance, because all others happened during the year. So these will come only in the closing. Then we will go through the adjustments. The opening values given there you have to take. Now this balance sheet will not tally. The balancing figure here you will get as, just compute the balancing figure. See whether you are getting 4,87,300. This will be written as capital or capital fund. This is the opening balance of capital. This is the balancing figure. Understood? Write the totals. Now the opening balance sheet is over. With this figure you have to start with the closing balance sheet. The date is 31st March 2020. So we will start the closing balance sheet now. Balance sheet as at 31st March 2020. Okay. What you have to do is again look into your receipts and payments. From there, all those items that we excluded before, that means when we prepared income and expenditure, we had excluded certain items. Capital items we had excluded. All those now should be included in this closing balance sheet. Okay. Why we didn't include into the opening? Because all those figures happened during the year, so these will come only in the closing balance sheet. So the excluded items you have to look now. The excluded items receipt side, we haven't excluded anything. Then payment side, okay, we have excluded books from your payment side. So, we will write books first. Now, when you write books, 31,200 is given in the amount column. That is the value of books which we purchased during the year. Other than that, in the beginning of the year, you have books of 3 lakhs. The same thing will appear in the closing also, because we haven't sold any books during the year, isn't it? So, the same value 3 lakhs will appear. With that, we have made additional purchase of 31,200. Understood? Then, it's not over. There is depreciation. You remember last year we used to write less depreciation from fixed assets. So, here also we have to write, and 30,000 you have to deduct. Okay, so this is how you have to show the values. The opening value have to take first. The same thing, it's there in the opening balance sheet. Since we haven't sold any books, you have to take 3 lakhs again in the closing. If you had sold book, this value will not come. We have 3 lakhs, that's the opening figure. Then we purchased during the year 31,200 that we got from the payment side. Then from that we deducted depreciation. Then what next? We have excluded investments. We had excluded, that investments value have to take here now. All those excluded items will take. So, investments will take. That's over. Then beginning of the year, books we wrote, furniture also we have. So, that also we have to write now. But for furniture, there is no additional purchase. So, only the opening value you need to write. But from that you should deduct something, that is less depreciation of 5,000. Last year also we did the balance sheet like this. We used to deduct depreciation and all. Then next one is, okay, then after investments, inside your receipts and payments, we have excluded one more item. That is the closing cash and bank balance. That also you can write now. Actually, we are not following that particular order of permanence or order of liquidity. It's better you leave that, you just write the items. You write the items in that order given, so that you will not miss out any item. So, we will write that closing cash in hand and cash at bank. If you can write in the order of permanence or order of liquidity, that is better, but or else just move in the order. Make sure you have written all items, though you don't follow the order. Okay, that's over. Next we have to take the opening values, books, furniture, already we took. Then subscription and arrears, the closing figure is given 7,000, that we have to take here. On the asset side, it is receivable amount. The closing figure we will take. Then 18,000, that is rent outstanding at the end. That is 18,000. Then depreciation is the next adjustment that we have already adjusted with books and furniture. So, now I think we have written all adjustments. Yes. So, automatically when you follow in that order, follow the order, automatically you will record all items. Next what we have to write is, always there should be a capital fund on the liability side. From where will you get this? From the opening balance sheet. We computed the figure, no? So, that you have to remember to write this capital always on the liabilities. With that we will add that surplus balance which we got. Surplus is there in your income expenditure account, 1,800,000. So, 5,88,100 we will write. Understood? So, now your balance sheet got over. Just write the totals. The totals must be same now. This balance sheet should tally, otherwise your answer is wrong. Okay, this is how you have to do the balance sheet. So, what did we do actually? We looked into the receipts and payments account, and all those items we exclude it from income expenditure. That means the capital items we included now. At the same time, you have to read the adjustments also, like depreciation, the opening values, all those figures you have to consider. Then similarly you go through the adjustments, the closing figures will come here. Okay. Then on the liability side, capital also you must write. So receipts and payments you have to check, adjustments and the capital you have to write on the liability side.